G'day, Rudy here. Welcome to the end of week review of the King MVR. If you're new, welcome. The reason I call him the King is because I believe this ETF should be a core holding for building a portfolio for the next 10 years plus. Whether you're looking for growth or dividends, this is the one you want to hold, and then you tilt it either way, and I go through that at the end. So if you're a VAS VGS index equity holder, I reckon this is, and we'll go through that, is outperforming, and we'll continue to do that. Okay, for existing people, sorry, you have to go through your the usual routine at the beginning of why we're doing it. So we're doing it because of this commodity cycle. It doesn't happen very often. This is 1800s. So it's now's the time. I started this channel in March, April, to try and get people involved. Anyway, so this is where we are now. And if we look at a shorter term picture, this chart here is this here. It's basically a basket of commodities and what their price looks like. And this is another reason too. This is the percentage of mining industry as a percent of global equities. So the mining industry is just, it's a smidgen of what the total market cap of shares are. Obviously tech is where all the big money is. And this is what we call the cup and handle pattern. So we're still at baby steps. All right, so onto MVR. So this is I'll just look at we'll look at a weekly chart. Okay, so he had a tough week this week, gold stocks. So he's gone up here and finished back down. But we'll look at monthly charts. So you can see there's a bit of resistance around here. The King's not meant to sprint too fast. So he had his about 4 weeks here where he just went sideways. So if he can just go sideways for a couple of weeks, his job is to pay some divs and put some growth in above what everyone else is doing. Okay, so and he's just getting himself back up into this channel here. Okay, so we'll just have a look at some of the indices. So this is VAS, so the Australian share market. So you can see it's at the top of the range. Now I like to use ratios. So if you take the MVR divided by VAS, it gives you the ratio. So you can see here, since really August, MVR has been outperforming VAS. Okay, and I expect this channel over time to go up of MVR outperforming. This is a new competitor I've given him, MVR over gear. So gear is the geared Aussie fund. So he hasn't done it yet, but he's on his way to outperforming the gear, which is popular among the young ones, I think. This is MVR over the financials, so he's outperforming them. MVR over VGS, one of those popular ones that's sold on YouTube by a guy with a smiley face and selling you a brokerage account. Anyway, MVR is outperforming VGS. MVR over IVV, so the S&P 500 started. So we're still at the beginning. Like, you didn't want to be invested in MVR for the last 10 years. You wanted to be in IVV because IVV's been outperforming. So I'm just trying to get everybody in a bit early, because it'll be over the month's time, and I already wish a lot of people did it in April. But Oh, that's life. MVR over the NASDAQ. So the tech industry, the tech market. So again, the king, he's put in a solid month and now he's having a break. Even though NASDAQ's all-time highs, these last 2 months, it hasn't outperformed. MVR over VDHG. So that's easy one. Actually, I forgot to show what's in MVR. Sorry about that. So in MVR, there's basically 31 mining stocks, like 7%, 6% down to 2% weightings. We'll go through each one. BHP and Woodside's at the top, and so the last ones, they have the least percentage. Okay, so that's the 31. Okay, so if we start off with so BHP is the biggest weighting. So it's mining copper. So this is your long-term copper price chart. So you can see we're just in this wedge here. So on its way up, and the other one is iron ore, is its main commodity that it mines. So iron ore is probably just but the cost of their production is nothing. So iron ore, I think, is just going to go sideways, but it'll basically provide the dividend income for the likes of BHP. So copper is where BHP is going to get its growth from, and iron ore is going to pay the divs. So this is the BHP price chart. So again, we had a big candle, monthly candle we're looking at, remember. Consolidate. So that's fine. That's all you want. We're not looking for a rip, because this is just your core holding. So if we look at the oil price, so again, we're not at highs here. Oops, we've got a bit of a price spike down there interfering with the chart. I can't show you the long-term picture. Anyway, so oil price again, it's just trading declining channel here. So long-term is bullish. Right now, it's not doing very much at all. Consolidating sideways. Natural gas. So again, natural gas, we're in the sort of the middle of this bottom range here. We're not at highs, so plenty of growth to go. Popped its head up above here, so it's just probably going to consolidate. So who does that flow through to? So Woodside. Go back to a monthly chart. So again, you can see, so Woodside's just consolidating sideways. Broke out of this declining channel here, and now it's just consolidating sideways, waiting for the oil price and natural gas price to go. But in the meantime, he's paying a nice 7.2% div, so someone's got to pay the bills and someone's got to go out and work. Okay, so gold. All right, so we had our first sort of, so big picture. Actually, we will do big picture targets. It's always good to look at long-term targets when you've had a bit of a short-term correction. So this is a log chart of the gold price. So it works on percentages rather than fixed units. So over the medium term, long term, I expect gold to have this percentage move from here to here. If you add it to, this is where it broke out in 2001, up to here, which is $8,400. So that's the eye on the prize figure for gold. So if we go back, because we've had a bit of a wobble last night, although when you look at it, it's still way above these trend lines here. So would it be good to see it do this? Probably. It's still the number one thing you want to own in the world over fiat currencies, so it's not going to crash. Consolidation would be nice. So why do we look at gold? Because this fella here, so Northern Star, that's our biggest gold miner. We have we can just go back to a normal chart. Okay, so it's had a stellar run. From here we had to buy, pick the bottom there. So that's a solid run. So it's now just sitting on resistance. Could it come down? Yes. Is it going to like crash 50%? No. Fortescue, so iron ore miner, so just consolidating sideways. This guy's, well, I think the iron ore miners, they're just going to pay the bills. Dividend of 7%. So we've got other little ones down here which do a lot of heavy lifting. Gold's been doing the heavy lifting lately. So Fortescue, as long as he pays his money, we're happy. Rio. Okay, so Rio is paying nearly 5% div, so he's not a bad one, this one. So iron ore and copper again. BHP's more copper. Anyway, it's beautiful. There's a declining wedgie there, so he'll move up. Okay, so now we get into some people that don't pay their bills, i.e. dividends, but they give us some growth. So Linus, rare earths miner. So he's doing well. He deserves to have a break though. Anyway, Evolution. So they're a copper and gold miner. Okay, so they've all run hard. So consolidation would be good. Origin. So the electricity generation, retailing, production, they're fine. They're just consolidating there. Santos, so another Woodside, oil and gas. And that's when they had the takeover offer, then it fell over. So so they're just consolidating too. So you can see that. So the King's done pretty well once these big boys I've just gone through start moving, which they will over the next 5 years or the next year. So there's still a lot of growth in the King. Okay, aluminium. So this is the price of aluminium, not a stock. It's starting to break out. Zinc's on its way up. Lead, even lead's starting to go, and nickel. So nickel hasn't broken yet. It's going in a squeeze. So who mines them? Well, South 32 does. So let me get that. That's a better picture. I've actually put a buy out in South 32 this week as an individual stock. So he's just bounced right off support here. So he's looking good to go. Orica. So they're the guys that mining companies use to blow up their land. So that's fine. He's sitting above resistance there. Okay, Ramelius. So they're another gold stock. So again, we could be in for some pullback consolidation on these gold stocks. Lithium. I'll go to the weekly chart. Okay, so lithium's broken their long-term downtrend up, and now they're just sitting sideways. So that flows through to the likes of the Pilbara Minerals. So you can see it's done its hard, it's broken out. So we're buying it. Wish everyone joined in April. Anyway, it's doing fine. Then we got Worley. So Worley Parsons, they're engineering project management in the mining industry space. So we're not doing one of these yet. We've got Ampol. Okay, so Ampol's broken out of these declining wedges, up, consolidate, that's all you can ask for. Perseus, gold miner. So again, look at that. That's a lot of growth to push in. So again, if they can just consolidate, catch their breath, then go again. So this is coal, not the stock, but the coal price. So again, we'll go to a weekly. So it's broken the wedge and doing the consolidation part. So that's all you can ask for. So Whitehaven coal, that's the coal stock we got in here. So again, a long-term flag pattern happening here. So it goes in that direction once it goes, so that's fine. Then we've got mineral resources. So again, there's that declining wedge broken. He didn't bother to consolidate, he's just going. But this looks like it probably should have a bit of consolidation. So they might mining services and iron ore and lithium all in one, so that's fine. Okay, Genesis, another gold stock, same story, just consolidate hopefully. They're not going to crash. Capricorn, it's another gold stock, so again, just consolidate, that's all we can ask for. Sandfire, so they're copper, it's our major copper miner, so he's fine. We saw that copper price. Horizon, so they're the rail freight operator, so they've broken the declining channel here, break, consolidate, then up when they're ready. Dyno Noble, so they're used to be called Incitec Pivot, so they're sort of in that explosive games as well. It looks beautiful. It's if you wanted to buy a stock, it's a bit like South 32. Regis, so another gold miner, just hitting resistance up here, so time to catch its breath. We've got a Luca, they're sort of in that rare earth space. There's your declining wedge break. So they're in one way, I hope these guys just consolidate, because it's much more constructive to build a projection from. Anyway, he's doing what he does. Okay, so uranium, if you haven't seen the price chart before, there's your lovely rounded bottom. It's a bit of a cup and handle with a high handle. Anyway, it's done the break from the down, consolidate. But the thing with uranium is most of the business is done on, not on spot, but on like 10-year contract prices. So the spot price of uranium doesn't necessarily impact the price of a uranium stock. Anyway, that's so this is Paladin. Now they've just done a capital raise at $7.25. So hopefully, if you're holding Paladin, you took it up. Try and get as much as you can, because they're at $8.80. So that's going to hold the price back for a bit, but it's wanting to go. So that's good. He's in there. Monadelphous, so mining services. So these guys just going to have work come down to their ears. So that looks fine. It was a buy there. It's probably still a buy now. Beach, so another oil and gas. sitting right at the bottom. So you can see like the King MVR is doing quite well. When you see a lot of these stocks, they're at the bottom of their ranges, and they will go up over time. So I think he pays a nice div too. Yeah, 7.4. So he's another one he's paying the bills while he's not working. Liontown. Okay, so they're in the lithium, another lithium space. So again, they've broken the wedge, declining wedge, consolidating for quite a while now. So next leg up. IGO, same pattern. Here's that pattern. And break sideways, then up. So they're lithium, but they've also got some nickel, copper in there as well. So got a bit of extra kick, but they're pulled back from their refinery business thanks to Elbow and his electricity policies. Elbow. The Terra royalties, so they they really just pay a dividend. So they take a clip of BHP's iron ore. They don't actually do anything. They just collect a royalty stream. But that's fine. You need people paying the bills. All right, so that's all the stocks that sit under the King. Now I'll go through. So if you've seen it before, if you've heard it before, you don't have to hear it again unless you want. But I'll go through. If you're new to all this, how I would construct a portfolio around this guy as a core holding, and then tilt it one way if you want dividends, or one way if you want growth. All right. Okay, putting the portfolio together by Rooster Productions. Okay, so how I see it is think of it, it's a war game. So the objective is to destroy the enemy who live in the castle, and they've got riches in the castle. So the first decision is what type of attack will I do. That basically depends on, do I want the riches in the castle? So basically if you say yes, you want the riches, then you're saying you want high growth. If you don't want the riches, just means you want income with a bit of growth above inflation. Okay. All right. So you decided you want the riches. So the plan of attack: you're going to need a tank to destroy the castle, and then some ninjas to go and steal the riches. Okay. All right. So the tank is MVR, so he just sits in the background there and drops his bombs, throws his missiles into the castle. So he doesn't get his hands dirty really, but he does a good hard chunk of it. And then you're going to need some ninjas. So these ninjas do a dangerous job, obviously, because they're going into the castle. So there's two types of ninjas. There's ASX ninjas. So there's ETFs like XMET, which is a sort of, it's got a whole lot of copper, rare earths, lithium, silver miners in there. It's not bad. Uranium miners, your gold miners, your silver ETF, your copper miners, your small companies ETF. Like a defense tech ETF, or any of your own growth ideas or shares that you might have. Then we've got some special US based ninjas. So these are which you can't get on the ASX. So these guys do a bit more of a powerful job than the ASX ones. So we've got your rare earth ETF. A uranium ETF, but these are the large caps. These are the medium cap uranium miners. SilJ, which is your silver miners. You get a little bit of them in XMET. GDXJ, which is your mid-tier gold producers. Miners is your senior gold producers. So in a bull market, the mediums outpace the seniors. So that's why I say they've got special growth powers. And LitP, which is a lithium ETF, you get a bit of lithium in there, but you get more depth. So in here, for example, in XMET, you might get 1 or 2 companies in lithium, whereas in here you get about 30. Okay, all right, so what percent of tank and ninjas should I use? All right, well, so ultimate risk, like game on, I'll take anything. All right, then you just go with no tank and just ninjas. Okay, you just go all in. So it can be done. I do have a subscriber who's done the just ninjas, and he in his first month he got a bit nervous because it dropped 10% in a week. Now he's laughing, but ninjas do a dangerous job. So if you're going to have ninja, you're going to expect, a week one of those ninjas could drop 10% in a week. Let's just set that. That's how dangerous the job is. But in a bull market, I expect them to come back like that sub did. He was in Remex, the rare earth one. Now he's up about 30 or 40%. Or you can go medium risk. Okay, so that would be a 50-50 job, 50 tank, 50 ninjas. Or you can go low risk, but not low risk as in cash. But that would be just the tank. But I'm still, when you go the tank, I'm still expecting the tank to outperform VAS, VGS, IVV. So it's not, it's not low risk like in the bank. There's still volatility, but the tank isn't going to drop 10% in a week. Okay, so you've got to sort of work out your risk profile there. I don't want to be given personal advice around, what. The rooster, I'll get in trouble from the rooster. He's my compliance officer. All right, or you decided, okay, I don't want the riches. I've got enough money. I don't need to make 30-40% in a year. I'm just exaggerating, but these ninjas I expect to make it at least 10-20% per annum. A lot of them are up all that in 6 months. But it's nothing's guaranteed. It's a dangerous job. You get reward for the risk you take. All right, so you're still going to need a tank to destroy the castle, because you've got to do some work. But you're going to need some drinking buddies. Just sit in the tank with you. So your drinking buddies are like your VHY, SYI, so dividend ETFs, ASX 300 div shares, property trusts. Okay, so in this scenario, what percent of tank and drinking buddies? Well, I'm thinking, like, if you're on ultimate income, then you go like 30% tank, because the tank's going to pay you a 4% div. So you can put that in the bank. And then say 70% drinking buddies, who'll pay you, I don't know, 6%. So that you still got you could just have drinking buddies, but they'll drink too much and they won't do any work. So the tanks, the growth performance of the tank will outperform the drinking buddies. Okay, because the tank's going to outperform VAS, and VAS is sort of the banks and your drinking buddies. Okay, so all right, or you want a good income but a bit of extra growth. So you set the bench, say 50% tank and 50% drinking buddies. Alright, so that's just a framework. And each weekend I go through, do a video on the dividend shares and ETFs. And I do a video on all the ninjas. Alright, hope you enjoyed that. Let us know your thoughts. See ya.